Hey everyone, and welcome back to the channel. Today, we are going to dive into a topic that might seem complicated, but is actually super important for everyone to understand. What is investment? If you've ever heard words like stocks, bonds, or portfolios and felt a little lost, you're in the right place. Whether you're a complete beginner just starting your financial journey or someone who wants a clearer, simpler explanation, this video is designed for you. By the end of our chat today, you'll see investment in a whole new, straightforward way. So, let's get started and demystify the world of investing together. At its core, investment is surprisingly simple. Imagine you have a seed. You can either keep it in your pocket, where it will just stay a seed, or you can plant it in good soil. With some water and sunshine, that seed will sprout and grow into a plant, maybe even a tree that gives you fruit. Investing is just like that, but with your money. Simply means putting your money to work somewhere so that it has the opportunity to grow over time. Instead of letting your cash sit idle in a savings account where it barely grows, you're giving it a chance to become more valuable. You're essentially planting your money and nurturing it so it can multiply. So, why is this so important? Why can't we just save our money? The main villain here is a little thing called inflation. Inflation is the reason that $1 today buys you less than it did 10 years ago. It's the slow, steady decrease in the purchasing power of money over time. If your money is just sitting there, it's actually losing value every single day. We invest to fight back against this. By investing, the goal is to make your money grow at a rate that's faster than inflation. This way, you're not just saving money. You're protecting your future purchasing power, ensuring that the money you have tomorrow will be able to buy you just as much, if not more, than it can today. Now for the really cool part. How does investing actually work its magic? The secret ingredient is a powerful force known as compounding, or compound interest. Albert Einstein supposedly called it the eighth wonder of the world. Here's how it works. When your investment earns a return, say 5% in a year, that return gets added to your original amount. The next year, you don't just earn a return on your initial investment. You also start earning returns on the returns from the previous year. This process creates a snowball effect. Over time, this compounding action can lead to exponential growth, making your money grow faster and faster. It's a slow process at first, but over many years, it can create incredible wealth. Okay, so where can you actually put your money to work? There are many different types of investments, and it's good to know the main options. The most common ones you'll hear about are stocks, real estate, bonds, mutual funds, and even starting your own business. Each of these categories comes with its own set of rules, potential returns, and of course, different levels of risk. For example, stocks can offer high growth but are more volatile, while bonds are generally safer but offer lower returns. The key is finding the right mix that suits your personal financial goals and comfort level with risk. Let's zoom in on stocks for a second, since they're one of the most popular ways people invest. When you buy a stock, you're not just buying a piece of paper or a number on a screen. You are actually buying a small piece of ownership in a real company. You become a shareholder. If that company does well, innovates, and grows its profits, the value of your share in that company will likely increase. This is why investing in solid, well-run companies is one of the most proven and popular strategies for building long-term wealth. You get to participate in the success of the world's greatest businesses. However, it's crucial to be realistic. There's no reward without some risk. All investments come with a degree of uncertainty. Prices of stocks, real estate, and other assets will go up, but they will also go down. Financial markets fluctuate based on the economy, world events, and countless other factors. This is a normal and expected part of investing. The good news is that risk can be managed. You don't have to lie awake at night worrying. By using smart strategies, particularly diversification, you can make your investment journey much safer and more stable over the long run. So what is this magical strategy called diversification? You've probably heard the old saying, "Don't put all your eggs in one basket." That's diversification in a nutshell. It means spreading your money across many different types of investments. Instead of putting all your cash into one single stock, you might invest in several different stocks across various industries, and maybe also add some bonds and real estate into the mix. By doing this, if one of your investments performs poorly, you won't lose everything because your other investments can help balance it out. Diversification is your best friend for reducing the chance of big losses and creating long-term stability in your portfolio. Another essential truth about investing is that it's a marathon, not a sprint. It is not a get-rich-quick scheme. Real, sustainable wealth is built slowly and steadily. Think of it like planting that tree again. It starts as a tiny sapling and needs years of patience and care before it becomes a mighty oak. The same applies to your investments. The longer you stay invested, the more time you give the power of compounding to work for you. Time is your single greatest advantage in the investing world. A long-term mindset helps you ride out the short-term market fluctuations and stay focused on your ultimate financial goals. Feeling ready to get started? The great news is that beginning your investment journey is easier than ever. You don't need a huge fortune to start. The most important thing is just to begin. Start small. First, take some time to understand your personal tolerance for risk. Then, choose a trusted, well-regarded investment platform or brokerage. As you start, remember the principle of diversification. And finally, commit to being a lifelong learner. Keep reading, watching, and learning about personal finance. You don't need a lot of money to be a successful investor, but you do need consistency and the discipline to stick with your plan. Ultimately, investing is a personal journey toward financial freedom. It's about taking control of your financial future and making your money work for you, not the other way around. It's a path that rewards patience, knowledge, and discipline. The sooner you start, the more time your money has to grow, and the more powerful the effects of compounding will be. So, take that first step, no matter how small it feels. Your future self will thank you for it. Thanks for watching, and if you found this helpful, be sure to like and subscribe for more content to help you on your financial journey.